There's good news for Bitcoin. We can make the final conclusion that the Bitcoin ETF is a success. We see continued inflows, and those inflows are actually quite rapid. Let's have a look at the data. Let's have a look at various charts. What we see over here is the daily Bitcoin ETF flows, both inflows and outflows. The outflows are mainly from the Grayscale Bitcoin Trust. And we see that in the last 1 to 2 weeks, we finally have some inflows again. Now here's a slightly different representation of the same data. So this is now the net flows. In the early days up until April, we mainly had inflows. Then things became a bit less clear. Now again, we tend to see mainly inflows. Now, how important are those inflows compared to the day-to-day buying and selling and compared to, for example, the Bitcoin mining issuance? The answer is those inflows actually matter quite a bit. If we annualize the last 14 days, we get 3.5% Bitcoin supply absorption. And currently, the Bitcoin that gets mined every year is only 0.85% roughly. So it's 4 times the supply that gets scooped up by the ETF relative to what gets issued to the miners. And so my impression is that Bitcoin becomes net a shrinking asset, an asset with shrinking supply. It becomes ultrasound money. It becomes the hardest of the monies. In the early days, without a Bitcoin ETF and with issuance of 100% or 20%, etc., that was not the case. But now the issuance is so small relative to what gets purchased. We are very likely going to see Bitcoin outperforming monetary expansion, which by the way is roughly 6.8% per annum. Now, not every ETF has been a success. Over here, we've got the data for the Ethereum ETF. Initially, quite a lot of selling as well by the Grayscale Bitcoin Trust. That has succeeded. But unfortunately, purchasing also has succeeded. It's pretty much a dead ETF by now. We've seen a bit of outflows on the 24th of September, then subsequent inflows again, then subsequent outflows again. The balance isn't really going in the right direction. Since the launch of the Ethereum ETF, we've seen net outflows of 153,000 Ethereum. So at the current price, that's roughly $400 million worth of Ethereum that went from traditional finance back into the spot market. For the Bitcoin ETF, we have seen 21 billion worth of buying pressure from the ETF. So a very, very different story. Now, why does this all matter? Does the Bitcoin ETF really have an impact on price? The answer is in this chart here. What we see here is on the y-axis, the performance of Bitcoin, and on the x-axis, the Ethereum net flows. And it's not a perfect correlation, but there's definitely some connection. When there are inflows or when there's purchasing through the ETFs, we tend to see the price go up and vice versa. Lots of ETF purchasing means a positive price impact on Bitcoin. And so there's 2 ways to now measure the assets under management for the Bitcoin ETF. Here's one of them. This is simply in US dollars. So now we've got roughly $60 billion worth of Bitcoin in the ETFs, and we tend to be topping out there to a degree. Is this actually good? The answer is yes, because even though we've seen a similar level on the 13th of March compared to today, the price during that time period went down by 13%. And so here's the second way to look at the assets under management of the ETF. It's just measured in Bitcoin, and that's way less volatile than measured in US dollars. And this is at an all-time high. And so yes, initially we saw much more accumulation than we see now, but still, I think we can pretty much conclude that the Bitcoin ETF is a positive force on the Bitcoin price. We do see continued purchases. I'd be very surprised to see this number lower, say 1 year from now. We are currently at 943,000 Bitcoin in those ETFs. And so the selling by the Grayscale Bitcoin Trust is also reducing over time. Now only 27% of all of Bitcoin is held by Grayscale. Now, how does trading activity of the ETFs compare to the spot market? The answer is over here. Initially at the launch, we had seen even more ETF trading volume than spot trading volume. Now the spot market is taking over again, but still roughly a third or so of trading happens through the ETFs. Now we've seen how there is an impact of the ETF demand on Bitcoin's price. There is something though that's I think even overruling this, and that's the long-term holders. When the long-term holders buy, then that's very positive. When they sell, that's not so great. Let me show you a comparison of long-term holder movements relative to Bitcoin ETF movements. That's over here in this chart. We see the long-term holder supply change in blue, and we see the ETF change in red and green. So of course we see some outflows from Grayscale in red, and we see some inflows from the other ETFs in green. And we have to actually look at the net change of those two. I don't have that chart though. But if you just compare the net of green and red to blue, then we see that the long-term holders actually have quite a bit of impact. When the long-term holders sold heavily, that is when the rally in Bitcoin somewhat stalled. Now we also see how they're recently purchasing again. So this could be a positive sign. So really those ETF flows are not necessarily a great tool to time the market. They simply show us that long-term the supply and demand dynamics are very healthy for Bitcoin. To time the market, looking at long-term holders, I believe is much more important. And there is a very nice metric for that. Here's the value days destroyed. And I look at this regularly, and it shows when long-term holders that usually do not move their Bitcoin, when they suddenly move their Bitcoin. And let's zoom into the recent here. This metric turned red on the 11th of March, and see how Bitcoin topped on the 13th of March, and see how we have discussed this in our premium chats. So AA Enscape posted this. Ladies and gentlemen, we have a first red bar on the value days destroyed chart for Bitcoin. We get heated. And following this, I published a premium update video. I sold some Bitcoin again on the 14th of March. I published those videos roughly twice per week. And again, that was pretty much the top of the market. So clearly on-chain metrics are very helpful. They're helpful for the short term. They're also helpful for the long term to see how healthy are potential trends. It's not just random that Bitcoin peaked at that point. Again, it's the long-term holders that determine the cycles. And whenever this turns red, this means we should be somewhat cautious, and that a further rally is not necessarily that likely. When Bitcoin peaked here at around 40k, by the way, was mainly the altcoins that subsequently rallied. Bitcoin still did another 50% rally or so, but it was really the altcoins that subsequently went up. Most investors rotated their Bitcoin gains into the alts. This is, by the way, not what happened in March of this year, but that's a topic for another video. That's mainly driven by the market for stablecoins. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. In case you've got Telegram and you haven't joined us yet, then feel free to check it out. Feel free to also check out Premium. It's thebitcoinstrader.com. Link is down below. There's a video on that website explaining all the benefits. If your portfolio is above $5,000 to $6,000 US, it should be worth it for you. Thanks for watching. See you in the next video, or maybe even see you in Premium. Cheers.